Okay, good morning everyone. Looking at the US stock markets, the Dow has again recovered from the 23,500 points level. Since then, we did see some of the resistance along the 25,000 psychological level. The Dow subsequently managed to break out and close above the 25,000 psychological level. It hit some of the resistance along the 25,500 points and subsequently staged the healthy pullback over the past four consecutive trading days. The weakness over the past couple of days was mainly stemmed by the US Federal Reserve move raising its interest rate and also pointing to a hawkish stance in future rate rise. On last Friday, the trade war between China and also US intensifies, which also led to the weakness on the US stock markets. Subsequently, the Dow has formed the hammer candle along the 25,000 psychological level, implying that this could be the potential breakout, pullback, and a potential continuation pattern for the Dow. Firstly, to retest the previous peak at the 25,500 points. Upon the breakout of 25,500 points level, we could see further upside towards the 25,800 or even towards the 26,000 psychological level. In the meantime, should the 25,000 level fail to hold, and further pullback will be seen towards the 24,250 points level on the Dow Jones Index. Similarly, on the S&P 500, we did see the S&P 500 has recovered from the 2600 psychological level. Since then, we did see some of the resistance along the 2750. Subsequently, the S&P 500 has formed the breakout, the potential pullback towards near the 2750, and the continuation pattern to be established towards firstly the 2800 psychological level. That will be the immediate resistance for now. Once the 2800 level were to be breached, further upside will be seen towards the previous peak around the 2870 level. In the meantime, should the 2750 level fail to hold, further pullback will be seen towards the 2700 level on the S&P 500. Some of this on the crude prices. The crude prices has again trended higher towards the previous peak of around the 73 US dollars barrel mark. Since then, we did see the pullback coming in on the crude prices just towards the EMA 120 level or around the 64 US dollars barrel level. It staged out of the mild recovery just towards the EMA 20 level and rejected the EMA 20 level. And on last Friday, we did see the crude prices has formed the bearish engulfing a candle, wiping out most of its previous few sessions again. So moving forward, we're expecting further pullback on the crude prices. Should the 64 level fail to hold, further pullback will be seen towards the 60 US dollars barrel mark. In the meantime, any gains for now will be just capped towards the 70 US dollars barrel level. The weakness on last Friday came in amid the concern over the OPEC's meeting, which is scheduled on this week, where we could potentially see higher production output from OPEC members. Okay, some of this on our local front. The FMKLCI has again pulled back towards the 1710 level. Since then, we did see a minor recovery on the FMKLCI, just a technical rebound towards the 1800 psychological level. It rejected the EMA 120 and subsequently pulled back for the past few consecutive trading days. However, on last Thursday, on the ahead of the Raya break, we did see the FMKLCI has staged a gap down, but it recovered most of its intraday losses. So we could expect some of the further or just a mild sideways movement with gains limited just towards the 1780 level for now, before the next pullback to resume. Given the weakness in the US stock markets and also the crude prices, we might see just some minor gains before the pullback or profit-taking activities to resume on the FMKLCI. On the lower liners wise, the FM small cap index has staged a healthy recovery following the double bottom formation around this 13,700 points level. Since then, we did see the FM small cap index has subsequently breached above the 14,250 points. It staged just a mild pullback, and on last Friday we did see another good bullish candle, implying that this could be the potential flat formation breakout that we're expecting the advanced small cap index first to retest the 15,180 points level over the short to mid-term trading period. On stocks wise, some of the stocks I can watch out for firstly will be JHM. JHM has recovered from the heavy sell down around the 70.5 cents level. After a climatic sell-off, we did see the bullish harami candle was being formed on JHM, and the confirmation on the recovery was noted on the next day itself, as the JHM has recovered towards the previous peak of around the 1 ringgit and 22 cents level. After hitting the 1 ringgit and 22 cents level, we did see JHM has staged some of the mild pullback or mild consolidation phase. But recently, we are seeing some of the mild technical rebound. As you can see that there's a 2-day of recovery. On the next day itself, it rejected the EMA 160 EMA 60 level. It subsequently pulled back and traded on a sideways manner. But on last Thursday, we are seeing some of the mild recovery pattern on JHM as price closed above the EMA 9 and also the EMA 20 level, accompanied by some of the improvement in volumes. So for now, we are expecting the JHM firstly to retest the previous peak of around the 1 ringgit and 10 cents. That will be the intraday or short-term target on JHM. Should 1 ringgit and 10 cents to be breached, further upside will be seen towards the 122 level. Your stop loss point will be located below the 1 ringgit psychological level on JHM. On Berjaya Corp, price has again recovered from the recent low of around the 27 cents level. Since then, we did see a 1-day gap up formation on Berjaya Corp, but there's no follow through buying interest. Instead, Berjaya Corp has pulled back, it wiped up previous sessions again, and subsequently on last Thursday itself, we are seeing a good flat formation breakout on Berjaya Corp above the 32 cents level. So for now, we're expecting Berjaya Corp to trend towards the immediate target price at the 35.5 cents. Should the 35.5 cents were to be breached, further upside will be seen towards the 39 cents level. Your stop loss point will be located below the 38.5 cents, and if you can take further risk, the final defense will be located towards the 28.5 cents on Berjaya Corp. Everything appears to be quite positive on Berjaya Corp right now. As you can see that the MACD indicator has been slowly creeping higher, forming the higher low formation. On Muiba, earlier we did mention on this counter that we're going to monitor for the breakout above the 3 ringgit and 10 cents level. It did breach above the 3 ringgit and 10 cents and continues to maintain its position above the EMA 9 level. The uptrend index orientation formation was also established. The EMA 9, 20, 60, and 120 has been in line. So for now, we're expecting Muiba to continue to creep higher towards the 336. While any mild pullback for now will be a healthy pullback for us to accumulate on this counter before the next uptrend to resume. Your stop loss point will be located below the 3 ringgit psychological level, and if you can take further risk, the final defense will be located below the 280 on Muiba. Last two companies for today will be firstly is Goodway. Goodway has again formed some of the resistance along the 33 cents level. After hitting the 33 cents, we did see a pullback on Goodway just towards the 17 cents level. After hitting the 17 cents level, we are seeing a sideways pattern on Goodway as price has recently formed the triangle formation breakout recently, and on last Thursday, we are also seeing price has formed a bullish candle as price rose above the 23 cents. With the breakout above the 23 cents, we're expecting further upside on a Goodway towards the first target price at the 27 cents or even towards the 30.5 cents level. Your stop loss point will be located below the 20 cents level on a Goodway. Last company for today will be LNG, Land & General. LNG is still on a downtrend of formation, so for now, any recovery will be just second as a technical rebound play. LNG has again formed the double bottom formation along the 16 cents. After hitting the 16 cents, we did see our price has staged the recovery just towards the EMA 120 level. It rejected the 120 level, but on last Friday itself, we are seeing price has breached and also closed above the EMA 120 or the 19 cents. it has breached above the 19 cents level on several occasions, but it did not close above that. But on last Thursday, we did saw LNG has gap up and close above that. So for now, we are expecting for the upside on LNG, a further technical rebound towards the 21 cents or even towards the 22.5 cents level. Your stop loss point will be located below the 18 cents on LNG. If you have any questions, you can put in the chat box and I'll reply you shortly. If there's no question for today, then we'll end the morning briefing. Thank you.